everyone, my name is John Fortune, and today what we're going to do is we're going to have a look, we're going to do a fundamental weekly assessment, which is what we do every week, where we look at the calendar for the upcoming week and we look at some of the events so we can gauge volatility or opportunities in the coming week. Now, for those of you new in the room, what we do is we put those into a spreadsheet, very simple spreadsheet, and then at the end we'll have a look and we can see where the volatility is going to be this week and how we can trade them this week. Hey Mayor, I can see Mayor's in the room. Afternoon, Mayor. So let's get started then by doing what we normally do on the Monday. Let's have a look at the Forex calendar. Now, can somebody just tell me if the when the calendar's up? That would be great. Yeah, it's up. Okay, thank you, John. Okay. So starting from today, you can see that we had construction's PMI for the pound came out negatively. However, today is a Canadian and American bank holiday, so we can expect today to be a fairly low volatility day, so don't see many opportunities for this morning. So if you are looking to trade, just bear in mind the markets may hardly move today because of the two bank holidays here, so we've got some major liquidity being taken out of the market. Now if we go towards tomorrow, so there's nothing else here for today. If we go and have a look at tomorrow, we can see we start off with something which is fairly big in terms of data, which is the cash rate, the RBA rate statement, which is the Australian interest rate decision tomorrow. So we're going to put down a capital X tomorrow morning for the Aussie. Now we can also see going down, we have pound services PMI at 9:30. Now services PMI is usually a big one for the pound because the pound, the UK economy is a service-based economy. So tomorrow morning we're going to put down a capital X for that because we know that can move the market fairly significantly. So we're going to put down a capital X tomorrow for the pound. And again, for those of you who are new, we're going to have a look at the spreadsheet at the end. So don't worry, we will bring it up so we can have a look together. Now, apart from that, we do have Governor Lowe speaking tomorrow at 10 AM as well. He's due to speak at the Reserve Bank board dinner, so I would imagine that this is going to be overshadowed by the RBA rate statement over here. It's hard to imagine that this is going to have any major effect tomorrow when we have the cash rate and the RBA statement at 5:30 in the morning. So we're not going to put anything down for that. Now we can see we have GDP, which comes out every quarter on Wednesday for the Aussie, so that's again going to go down as a capital X for the Aussie, because that is a significant piece of data. We have the Canadian trade balance, but generally speaking, unless there's something wildly divergent from the forecast, that usually passes without much volatility. Now, if we go down and have a look at 3 o'clock, we can see that we have the BOC rate statement and the overnight rate, which is essentially the same thing. It's just the Canadian interest rate decision. So we can put down a capital X here for the CAD on Thursday. And in fact, you can see we have a number of interest rate decisions this week. So these are going to move the market fairly significantly this week. Now we have also retail sales and Aussie trade balance. We have two together. Retail sales, we know, can affect the market, so we're going to put a small X down for the Aussie on Thursday. And coming into Thursday, we also have the minimum bid rate and the ECB press conference, which again is the same thing as the previous two, which is an interest rate decision. So we're going to put down a capital X for the euro on Thursday. And going down, we can see we have unemployment claims down here at 1:30, but we know these come out every single week and they generally don't tend to move the market. We have crude oil inventories, which comes out pretty much every Wednesday or Thursday, and so we're going to put down a small X here for the CAD on Thursday. The reason we put a small X down for the CAD, again, for those of you who are new, is because Canada is a large oil producing country, so the oil price tends to affect the Canadian dollar more than the US dollar, even though down here it says US dollar. When you have crude oil inventories or you have oil data, you want to be looking towards the CAD primarily. And if we scroll down now to Friday, finishing the week, you can see we have Chinese trade balance. Now, we know from previous sessions that Chinese data usually affects the, I think you might be getting a bit of feedback there, are we? Sorry about that. Okay. Okay, apologies for that. I think he's getting a bit of feedback there, so hopefully that should be sorted out now. So you can see on Friday we do have Chinese data. We usually look towards the Australian dollar because China is a strong purchaser of goods and raw materials from Australia. So the Chinese economy is doing well, generally speaking. It positively affects the Australian dollar and vice versa. However, the trade balance, I'd be surprised to see any major movements in the Aussie dollar based around this. So we're not going to put anything down for this. We can see we have Governor Lowe speaking on Friday at 9:30. Let's just have a quick look, see what it is. So he's talking at a dinner, so can move the market, but with the interest rate this week, I would suggest that it's probably likely to pass uneventfully. Now we have manufacturing production at 9:30 on Friday, so we'll put down a small X for the pound, coming up to the end of the week here. And we can see we have employment change data and unemployment rate coming out for the CAD as well. So we're going to put down a capital X for that because that can move the market fairly significantly. So let's just quickly bring up the spreadsheet that we have here. So could someone just confirm if the spreadsheet's up there? Just have a Y in the box for me and let me know. That'd be great. Yeah, okay, thanks, John. Appreciate that. Okay, so you can see pretty much all week we are fairly clear on the US dollar. Interest rate decision on Thursday for the euro. So either looking at trading the euro early on in the week and being out, or positioning ourselves early on. So for example, if you're looking for an entry over the next 3 days in the euro, potentially for a move down on the interest rate decision. Alternatively, another way, of course, is to be in and out before the interest rate decision if you trade using tight stops, and then maybe after the interest rate decision on Friday or next Monday, look to take a trade with the data that came out on Thursday. Now you can see Japanese yen pretty much free for the whole week, and also the franc and the New Zealand. So if you're looking to avoid volatility this week, certainly you can be looking towards, say, the New Zealand franc, the franc yen, the New Zealand Japanese yen, the US dollar yen, US dollar CAD up until, say, Thursday, US dollar franc, and also the New Zealand US dollar. So you can see these ones would avoid any of the major volatility this week if you want to get tight stops in. Just bear in mind though, when we have a euro interest rate decision, you're going to affect some of the other currencies as well, and also when we have an Aussie interest rate decision, you're going to see some volatility in the New Zealand. So just bear that in mind, but generally speaking, in general terms, you have clear run on these currencies here if you're trading with smaller stops. So let's go and have a look now at some of the currency pairs. One of the ones we can look at is the New Zealand US dollar. Let's go and have a look at the New Zealand US dollar first. In fact, we usually look at the US dollar index oil first. So we'll have a little look at the US dollar index and oil first. Can someone just confirm if the US dollar index is up for me? Yep, it's up. Okay, thanks, Mayor. I hope I'm saying your name right. Is that right, Mayor? Is it Mayor?
I think I'm saying it right anyway. Okay, so let's have a look at the okay, it is now. Okay, great. So let's start off by having a look at the US dollar index. Now, we can see here we have highlighted a number of targets. Now, last week we had highlighted this target down here, and we started the week here. And we had highlighted this support and resistance level last week, and as you can see, it came down, it tagged the target, and then it bounced up into the resistance area that we had here, and it started to sell off late last week from the resistance area we had highlighted last week. Now, today, as you can see, because of the bank holiday in Canada and America, very, very little has happened, and I suspect very, very little will happen for the rest of the day, unless we start to see something from the New York Open in about 45 minutes. But generally speaking, I think we're going to see pretty much no volatility today. So looking at the US dollar index, we are looking for a continuation to the downside because, as you can see, we have this move. Now, this is a fairly steep pullback in the US dollar index. However, it is just a pullback to this previous resistance level. So we kind of go into this week in a little bit of a funny place because we're still looking at this to the downside because we're expecting further declines to the downside to these targets down here. So we have the 11,841, which was hit last week, and also the 11,776. However, we're kind of in a range. I mean, we really wanted to see these bouncing from a little bit lower down and keeping this kind of lower lows and lower highs in place. So we do run the risk that this could break out to the upside, which is why we also have a target to the upside at 12,070. However, the whole time, the premise based around the US dollar index this week is going to be that as long as it stays below the 11,940, then we're going to be looking for further declines in the US dollar index. And if we get a break up and above this downward sloping trend line here, then we're going to be looking for some continuation to the upside in the US dollar index. So as long as it's below this confluence of the downward sloping trend line and the resistance area, we're going to look for declines. And if we get a break above this confluence area here, then we are going to be looking for longs in the US dollar index. So just bear that in mind if you're trading anything with the US dollar index this week. Now, so as a result, we're going to have a neutral to bearish bias. As a neutral to bearish bias because it is actually ranging. I mean, this could come down like this, and it could even come back up like this. So we'll take some of the other currencies on their merit this week. So let's go and have a look at oil before we go on. Now, we know oil affects the Canadian dollar. Now, oil is in a fairly similar position to the US dollar index this week. And usually when we come in, we like to give looks like an ABC correction to the downside. Is that the US dollar index there or oil? US dollar index. Okay, let's just have a quick. Let's just quickly go back for have a quick look at it. Yeah, I would agree. It does, to me at the moment, it does look like this. And we did come up and we did tag above these highs over here, but that does not mean that this downtrend has been negated. So certainly, hence why I say if we stay below this level here, we're going to be considering this as an ABC, that's correct. But if we get a break above this area, we're going to know that this, what we're looking at as an ABC, is invalid. So I would agree with that there. Now, if we go and have a look at oil, we're in a similar position where we're viewing this as a correction. Now, we're at this key level of support and resistance. So support over here failed. Looks like it's coming back to test this with a correction at roughly the 47.30 area. Now, we're starting to get a little bit of a breakout of this downward sloping trend line. However, you can get breaks out like this and it continues down. So we're not going to say that this is completely negated, but we are going to use the same principle that we're using on the US dollar index this week, which is that as long as we stay below here, we're going to view this as correctly intact, and we're going to look for further declines to the downside. And we're going to be looking towards the $45 barrel mark. So if we get a decline down here, we may see a little bit of weakening in CAD, although CAD is looking one of the strongest going into this week. If, however, we start to get a break up into this area, then certainly that is going to help the strength of the CAD, and we could see a very strong CAD this week. So below this level here, we're looking for moves to the downside, and above this level, we are going to be looking for longs, at least up to this area over here first, but possibly all the way up to the 49,647 area over here. So both of these, we just need to be a little bit more patient this week. You know what we're looking for in terms of direction on these, but right now they're kind of at a decision point. So we just need to give it a little bit more time, and we'll probably see these breaking one way or the other tomorrow, and that will give us an indication of what they're going to be doing. So if we go and have a look at some of these currency pairs, now if we go and have a look at the New Zealand US dollar first, let's have a look at the New Zealand US dollar. Now the New Zealand US dollar, we're prepared to play both ways because, as you can see, it is very, very weak, the New Zealand, and although we are expecting potentially further declines in the US dollar, the US dollar index could break to the upside as well. So we have to trade this on its own merit, and what we're seeing here is a corrective pattern to the downside. Now we have this move to the downside over here, which for those of you who know your waves will know this is an impulse wave, and we have this correction over here like this. So we are looking for a continuation of this move here, and we're looking for this to continue down into this area. And we have two targets highlighted on New Zealand US dollar at the 0.7109 and the 0.70640 down here. So these are the next two key targets to the downside in the New Zealand US dollar. If we get a break above the downward sloping trend line in the US dollar index, then certainly we're going to see this be pushed to the downside. If, however, the US dollar index just continues to range like this, because the New Zealand US dollar is weak, we will still see this declining to the downside. So unless we get a strong break above the key area of support over here, as you can see, support turning resistance, then we're going to maintain our bearish bias on this, and we're going to be looking for shorts down towards those targets in the New Zealand US dollar. Price starts to come above here, then maybe we need to take this off the table, and we need to reconsider this pair based on what the US dollar index is doing. So let's go and have a look also at the US dollar Japanese yen, because these are this is another currency pair that we do not have major volatility, potentially don't have major volatility coming into this week. Now you can see in the US dollar Japanese yen, and based on what we're seeing in New Zealand US dollar and the US dollar Japanese yen, you can see that the US dollar is actually setting up for some strength this week. So although we're still in a downtrend, some of the other pairs are maybe given an early indication of some US dollar strength. But we'll just have to wait and see how that plays out. But certainly you can see in the US dollar yen, we have this big push to the upside over here, and we now have this kind of corrective pattern. And we were looking for a pullback to the 109,770, which is a key area of support and resistance, as you can see over here. And we were looking for broken resistance to act as support. However, we had a bit of a gap down on, I think it was the North Korea situation, Selvan. Because as you can see, we started the week over here, and actually what we were looking at, for those of you who follow the weekly forecast, we're looking for a little bit of a pullback in this area, and then some moves to the upside on these. However, we can see that, in my opinion, completely illogically for the second time now, because we had the similar thing in the Aussie yen last time there was a problem with North Korea. We saw the US dollar yen gap, the Japanese yen gap to the upside. Now, this to me does not make a lot of sense, and it just goes to show you that the market cannot move, or the market does not move without humans. If you take away human behavior and you take away the human element of the markets, no single piece of news or fundamental news could ever move the market. News in and of itself does not move the market. What moves the market is the way traders behave to that news. It's people who move the market. If you take the people out, news can't move the market. And what we're seeing here is we're seeing completely counter to any reason, in my opinion. We're seeing the Japanese twice now strengthening on the back of North Korean provocation. Now, the reason I say that's illogical is because if you take to its most extreme conclusion, Japan is very, very likely, if there was going to be, I'm not saying there is, I'm just saying we're talking theoretically here, say the North Korean situation was to spill over into nuclear war or even just war generally, Japan is right on the cusp of that. I mean, it would be very, very likely that they would find themselves, drawn into that, and they would find themselves probably as some collateral damage, and they would find themselves being, directly affected by that. Now, if you take that to its extreme conclusion, if you were to imagine that Japan was, say, to be completely wiped out, which again, I'm not saying it is, we're just talking hypothetically, the idea that Japan could be damaged or wiped out and the yen actually gaining strength off the back of that is not logical. It doesn't make any sense. I mean, if Japan was to be severely damaged, or the Bank of Japan was to be blown up, the idea that their currency would increase in value is a nonsense. But we have to take the market as it is. And basically what they're showing is every time there is a bit of North Korean provocation, the Japanese yen is increasing in strength. So just bear that in mind, because if more provocation or more issues arise from the North Korea situation, traders are showing us that they are actually putting money into the yen. Yes, the yen is a safe haven, I understand that, but it doesn't make sense for that to be a safe haven if Japan itself is directly in the firing line of the conflict, which it would be. So that's something just to note on the basis of the North Korean problem. But however, we are still looking for, going back to the US dollar Japanese yen, we are still looking at this as this kind of pattern here, which is a continuation pattern to the upside. Now we've pulled back and we gapped below the key area of resistance over here. So what we really want to see in the US dollar Japanese yen is for price to actually start trading back above this resistance area over here. And if we can get back above this resistance area, certainly if we can break out this kind of trend line like this, we're going to be looking to initiate longs in the US dollar Japanese yen. A little bit cautious again, because they've shown that they're going to give they're giving the Japanese yen strength on the basis of North Korea issue. So maybe this is not a trade you want to be holding over the weekend. If it comes to it, maybe these are the trades, anything to do with the yen, maybe you want to consider taking off for the weekend. But if we get above the 109.770 key area of resistance over here, then we are on for the targets of the 110, roughly 900, and then also the 112 psychological level up here, a continuation of this bull flag pattern like this. So let's go and have a look at a couple more, and then I'll take some questions. So let's go and have a look at the New Zealand Cad. Now, New Zealand Cad, we're looking for some weakness in the New Zealand, and we also are expecting some for the CAD to be strong this week. Now you can see that we are actually in the continuation of this move to the downside in the New Zealand CAD, and just going back to the euro, the US dollar Japanese yen, this continuation move of this pattern over here is what we are looking for and expecting over here. So you can see now in the New Zealand CAD, almost like looking into the future of what we're projecting in the US dollar yen. But let's just go back to the New Zealand CAD. Now you can see this is in a clear downtrend, so this is certainly not something we want to be looking at buying. What we're looking at is a pullback, any buying coming into this pair to be used as an opportunity to sell this currency pair at a better price. And ideally we're looking up towards the 0.8954 area as a very good potential turning point in this pair. Certainly if we start to get an ABC pattern or corrective pattern up into this area, then that is going to give us even more confidence. But either way, even if we don't pull back to this, say we start to get a little bit of a breakout to the downside, we are looking for some shorts to be placed in New Zealand CAD this week. We're looking down towards the target of the 0.8777. So the more this pulls back, the better the opportunity we have to the target. So as you can see, we don't really have any opportunity to get involved just yet, but perhaps tomorrow this spends the rest of the evening correcting, and perhaps tomorrow we can get a trade to the downside in this area, a continuation of the overall move to the downside. Now, if we get involved with that before Thursday, just remember we have an intra-trade decision on Thursday, so we can do two things. I mean, if it pulls back and we get involved and down here, you can put your stop to break even and try and ride it out past here, or take profits, wait for the news, and then you can maybe look at getting back involved in the CAD pairs after the news. So there's different ways you can trade. That really depends on how you like to manage the trade yourself. And let's just see what else we can have here. Let's go to the Euro franc. Now the Euro franc is setting up as quite a nice one. Would have been nicer, and certainly this is the kind of thing I would expect, as you can see, the franc becoming a bit of a safe haven off the back of North Korean escalation. Certainly the franc is one that would act as a safe haven, but the Japanese yen doesn't make a ton of sense to me in the circumstances. Now the Euro franc is a good trade. It's starting to look a little bit less good as time is going on, because we're starting to get a breakout of this level over here, and as you can see, this is a key area of resistance that held multiple times over here, and we've got a break finally, and we're looking to get a pullback over here. Similar to what we were talking about with the previous, I can't remember what the previous currency was. Was it New Zealand, US dollar yen? Was it US dollar yen? Give me a second, guys, because I don't want to give you the wrong information. Yeah, the US dollar yen. So you can see we're waiting for this to come back above this area of resistance. So the Euro franc as well. What we want to see in the Euro franc is we want to see price trading back above this area over here. Back inside the trend line would be nice, and then we would be looking at this just as a false breakout. And then in this kind of area over here, we're going to be looking to initiate longs on the Euro franc. Now the reason I point the Euro franc out as well is because if we go to the left over here, you can see in the bigger picture, this is just a correction of this move over here. So we are expecting a continuation up into this area. So really we want to see it trade back above here, because the danger is all the time we're below here, we could start to get a move back down into this area, and we could be on for just this kind of range and then maybe a move up from here. So assuming we get a break back above this key area of resistance, roughly at the 1.1414, start to see a break up here like this, then we can look for these targets to the upside. So the first target is the top over here at the 1.1524, and I think we have one slightly higher up as well. Yeah, and the next one to the upside, if we can break this top over here, we're going to be looking up towards the 1.1630 in the Euro franc. So we get a move back above here maybe tomorrow, or once price starts moving a little bit, then this is certainly a good opportunity in the Euro franc should it set up as we're looking for it to do. So we're at the half an hour mark. We've gone through a few of the currency pairs there that we're looking at. What we'll do is let's open it up to some questions then. Have you got any questions, guys, or anything that you want me to look at? I mean, I'm more than happy to answer your questions. Or any of the pairs that you might be trading yourself. Okay, Selvan says pound US dollar. Okay, let's go pound US dollar. So pound US dollar, Selvan, is in fact one of the stronger, looks to me like one of the stronger pairings against the dollar. So if you can see here, we actually had this push up last week, and this was the target that we had highlighted from last week. We said if we get a bounce from here, this is where we're thinking it's going to come to next. And it traded into this, and it kind of rejected, but only in a corrective fashion. We didn't see a move from here. Gold long safe haven, yeah, definitely, John. I think if you can get anyone gets involved in gold early and can hold on to it, then certainly a good thing to be riding out through the North Korea crisis. In fact, it's something we're going to be looking at trying to get involved in at some point, but we just have to correctly position ourselves into it. Because gold would almost certainly go up if there was something, and it would go up fairly significantly as well. At the very least, if you had other trades on which were negatively effective, I mean, it would act as a hedge in those times of trouble. So the pound US dollar anyway, Selvan, has broken back above this year resistance to 1.29390, and it is in fact forming a corrective move like this. So I would say that the pound US dollar is one that we're going to be looking at personally, and from the area where it sits now, and we're going to be looking up towards the first target here at the 1.3031. Now this is the first target because, as you can see, we're forming this kind of head and shoulders, and this is the neckline. So what we might do is we might end up getting a bounce from here to the downside, but if we get a break through this level, then we're looking up to the 1.3100 psychological area as the next target to the upside. So pound is looking like could be ready to go, you know, possibly even today, depending. Yeah, I mean, you're looking at this now. I imagine that's probably the flag on the lower time frames. Yeah. So we're looking for a continuation of this move up into this area, and you can see it's sitting above the key area of resistance. In fact, it's tested it as support, which is nice. It's always a nice plus if you can get that kind of price action. In fact, let's go and have a little look at gold, John, since you mentioned it. We'll have a quick look at gold. Someone said euro pound. So you can see gold here at the moment. It's just trending to the upside. What we really want to see is we want to see a deeper pullback, probably somewhere into this area before we look for a longer term position. Because we run the risk at the moment of having a deeper pullback in the gold, so I can't really see anything as of yet in gold. So Selvan says euro pound. So euro pound, we had highlighted this support area on the euro pound, and as you can see, it's actually bounced from this area today by the looks of it. We've had a breakout now of the downward sloping trend line, so possibly euro pound could be on for a move tomorrow. So we're starting to get a little bit of a pullback like this. Now euro pound, do we have any targets on the euro pound? We should do, yeah. So we've got a target, Selvan, on the euro pound of 0.9380, which is the next key area of resistance to the upside. Just bear in mind where we are here, this top over here is a very, very significant resistance point. So if it comes up into this area over here and it starts to bounce, maybe a good idea to get out of the trade, or at least take your risk off the trade, maybe with a break even down here. So I'm not a big fan, for those of you who know who are in the room with me, that I'm not a big fan of moving stops to break even, but there are certain times when it's a good idea. Certainly not a fan of moving stops to break even too quickly. But if you're in the trade and it comes up to here and bounces, then just be aware that this here, roughly the 0.9300 is a very, very, very significant resistance area. So that's right, Mayor. Could also be a forming head and shoulders, but you want to be a little bit careful. I mean, if we would really want to see it actually form and then confirm that before we jump into it. Otherwise, because do you remember over here? And this is the thing with the reversal patterns. Do you remember over here we were talking about this pattern? Do you remember this, Mayor? We're saying that this is a rising wedge, and although it was a rising wedge, I said to you guys, you don't want to just sell. You don't want to see reversal patterns and just sell them, because otherwise you're just going to end up. They can be in a bit of an illusion sometimes. They can draw you into trying to counter trade a trending market, which is just going to cost tons of money. So what we said is we really want to see a breakout, a confirmation of this rising wedge, and as you can see, prices still continue to trend to the upside. So just be aware in terms of the head and shoulders with that. But I mean, looking at it, from here as well, this could also be this kind of pattern like this. Yeah, exactly, Mayor, because here's the thing. This is still trending to the downside. So yes, we have a breakout of the downward sloping trend line, but this still has the potential to continue down like this. So for us personally, we're going to need to see some evidence that this is going to continue to the upside. It's too early to say just off the back of this. Does that answer your question, Selvan? Yeah, okay, great. Okay, so we're coming up to quarter 2, so what we'll do is we can, you're very welcome, Selvan, so we can give it another few minutes for any questions if anyone's got one, and then we can wrap it up in about 4 minutes. Obviously, if there's no more questions, we can just we can wrap it up now. No, okay. Selvan says, "What tool are you using?" What do you mean tool, Selvan? You're very welcome, John. Euro US dollar. Okay, we'll go and have a look at Euro US dollar. Euro US dollar, pound yen. Okay, let's go and have a look at a couple of these charts. Okay, so let's just have a look at these, the Euro US dollar. Now, the Euro US dollar, okay, we'll do the Euro US dollar and then we'll do the pound yen and then we'll. So the Euro US dollar, as you can see, these are the targets that we had from last week. I don't know if you guys follow the forecast, but you can see we started the week here and we had this as the first target, and we had this as the second target, and we had this as the support area. So we've hit the 2 targets and we actually reversed from the top target all the way back down to the resistance area that we had highlighted. And so now we were looking for potentially a trade to the upside and the continuation in the Euro US dollar, because we are looking for the US dollar ultimately to continue to the downside. Now, the problem we have is we have the Euro US dollar in a essentially this pattern like this. So it's showing us that it's setting up for further declines. However, based on what we're looking at in other pairs, we do want to look for longs in the Euro US dollar. So our problem really is that we're in a kind of range like this. Can you see this? Who asked about the Euro US dollar? Ravi. So what we really want to see is we want to see it come out of this because it could be doing something like this. So we really want to see this probably trading back above the first target that we had up here, the 19680. So if we start to get into this area up here, or possibly even, in fact, I'm not going to draw that on there. So we probably want to see the safest trade here, Ravi, is above the resistance area at the 1.1980. So we get into this area over here. This is the safest place to start looking for longs. It doesn't mean that you can't get involved down here, but you just want to be careful and you just want to make sure your stop placement's in the right place if you do get involved down here. So I mean, at the moment, for example, it's because we have such big volatility, the stop would have to be quite big at the moment, unless we get some kind of pattern in this area. So above here really is your best area to start looking for longs on the euro US dollar. So let's quickly go and do the pound yen, and then we will we'll be done for today. So the pound yen, we are looking for a continuation to the upside. You're very welcome, Ravi. We're looking for continuation to the upside in the pound yen, and we're viewing this simply as this kind of pattern, which is a corrective move. So we're sitting currently at key level of support at the 141.92. So what we're going to be looking at now in the pound yen is continuation to the upside. We have a target here at the 14400 level on the pound yen. So very straightforward corrective pattern on the pound yen. If we start to get a breakdown below corrective pattern over here, could be on for a new leg to the downside, so just bear that in mind. Okay, Wolfgang? Okay, you're very welcome. So we're going to wrap it up here, guys. Thank you all for today. I will see you guys next Monday. We'll be here next Monday, and I hope you'll have a great week and also a great weekend next weekend. So best of luck for the week. Take care, guys.